What impact do closing costs have on mortgage rates? Imagine walking into a home you love and realizing there are hidden costs you didn't think about. Closing costs are those fees and expenses you pay when finalizing a mortgage, separate from your down payment. These can include lender fees, appraisal fees, title insurance, and more. Understanding how these costs influence your mortgage rate is key to making smart decisions when buying a home. At the core, closing costs and mortgage rates are two main factors that shape the total cost of your home loan. The interest rate is the percentage you pay on the amount borrowed, while closing costs are the upfront fees to get the loan. These two are connected through choices you make during the mortgage process. One common link is through discount points. A discount point is a fee paid to the lender at closing in exchange for a lower interest rate. Each point costs about 1% of your loan amount and can lower your rate by roughly 0.25%. If you want a lower monthly payment, you might choose to pay more upfront by buying points. But if you want to keep initial costs low, you might accept a slightly higher interest rate instead. This trade-off is important, especially if you plan to stay in the home for many years, because the savings from a lower rate can add up over time. Closing costs also impact your loan through the annual percentage rate, or APR. The APR shows the true cost of your mortgage by combining the interest rate with certain closing costs like lender fees and points. Loans with higher closing costs tend to have a higher APR, even if the interest rate is the same. Comparing APRs helps you see which loan might cost less overall. Keep in mind, some third-party fees like appraisals or title insurance are usually not included in the APR, so it's good to ask your lender for a full breakdown. If you decide to finance your closing costs by adding them to your loan, your monthly payments will go up because you're borrowing more money. This can reduce your upfront cash needed but means you'll pay more interest over the life of the loan. Closing costs can vary a lot depending on the lender, the type of loan, the property location, and negotiations with the seller. Sometimes sellers agree to pay part of the closing costs, which can make buying a home more affordable. This is more common when the market favors buyers and sellers want to close deals quickly. For Asian American homebuyers, understanding these factors is especially helpful. Many families receive financial support for down payments, but closing costs are often overlooked. Planning for both upfront and ongoing costs can prevent surprises and help families make confident choices. Working with real estate professionals who understand cultural preferences can also make the process smoother. Practical steps include asking your lender for a detailed list of all fees, comparing both interest rates and APRs, and thinking about how long you plan to stay in the home. If you want to minimize upfront costs, look for loans with low or no closing costs, but be aware these often come with higher interest rates. If you plan to stay long-term, paying a bit more upfront for a lower rate might save you money in the long run. In the end, closing costs influence your mortgage rate through options like paying discount points, and they affect the overall cost of your loan through the APR. Careful comparison and planning help you find the best fit for your financial situation, especially when family support and cultural factors are part of your home buying journey.